So I think we can start. Many people will keep joining during the meeting. Hello everyone. On behalf of the Finance Club IIT Patna, I Madhur Jain welcome you all to a very special guest session. Today we have Indian American investor Mr. Mohnish Pabrai sir as our guest, who is the managing partner of Pabrai Investment Funds and the founder chairman of the Dakshana Foundation. He is also an alumnus of Harvard Business School. He is a very reputed value investor in the whole world and has also worked and collaborated with top investors like Charlie Munger, Lee Lu, Warren Buffett, Guy Spire, and many more. The session will be in Q&A format, where in the first half, we will ask the collected questions, and then in the second half, audience members can raise their hands and ask their questions directly. We are extremely honored and grateful that you have accepted our invitation and will share your insights and experiences with everyone today. Personally, I am very inspired by your Dakshana Foundation initiative, which is creating an unbelievable impact in India.
Well, Madhur, it's a pleasure and honor to be with all of you. I think this is my first recorded session with IITians, so that's wonderful. So great to be with students at IIT Patna, and look forward to speaking about what you have on your minds. So let's get to it.
So we observed that in last few years you have conducted so many sessions with all the educational institutions in the world, and you were very keen to share your learnings and experiences with everyone. And it's really an honor for all of us to learn and interact directly from you.
Well, I have an ulterior motive for doing that because the best way to learn is to teach. And so, what I'm really actually trying to do is just teach myself. And there's a side effect that some other people hopefully are learning a few things. And so, it's a win win, works out well.
Yes, sir. So, sir, I think we can start with the collected questions. So, can you share your framework of identifying and analyzing deep value stocks, especially in ignored global markets, like your investment in a Turkey company?
Well, I mean, I think that value value comes in many shapes and forms and sizes, and sometimes we can see the value very obviously in the numbers or the earnings or the stock price of a company, and sometimes we have to dig a little bit. So, for example, uh, through most of its history, Amazon uh, either had very little earnings, or if you look at the PE ratio for something like Amazon, it might be around 100 or so. Um, and the the reality is that um, even if you had bought at that very high multiple, you would have had a spectacular result because uh, Amazon really wasn't trading at 100 times earnings. Basically, what they were doing is they were running a very profitable business, but they were taking the cash flows from that business and investing into the future. And those cash flows were being invested in a very high return on equity manner. And so basically, that is in general a superior business model to, let's say, a company like Google, which doesn't appear to be that expensive relative to Amazon, but does not have the same reinvestment engine. So really the only choice Google is left with is maybe to buy back stock and so on. So basically, value comes in many shapes and forms and sizes. We can find some things which are sometimes um, priced very cheaply from an optical point of view, and as long as the operations are stable and maybe even growing, If you're buying at a very cheap price, the outcome may be good, even if the business is not that great. We were buying something at 2 times earnings, and it should be might be worth 10 times earnings, or so on. And at other times, like Amazon, we could be paying a very high multiple and have an even better outcome. So basically, I think uh, the the nature of investing is that in terms of kind of finding bargains, or finding anomalies, or finding things that are likely to be places where value hides. Um, One can look at some data points. So, for example, going back to the Amazon example, the first desk that Jeff Bezos had in his office was a converted door. So he took a door, made that the surface of his desk, and just put some stand on it. And he worked on that door desk for a long time. And when Amazon established operations in India, and the guy who came to run Amazon in India, he used to be a shadow for Jeff Bezos for a couple of years. Basically, Jeff has these shadows who kind of like apprentice learning everything. Uh, he made his desk a door also, and it was more symbolic, obviously, because Amazon could afford to buy. But I think the symbolism was that it is a company that watches its pennies. And even today at Amazon, nobody is paid more than $170,000 base salary. So basically, you know, something like uh, below like 1.5 crore or so. So uh, the base salaries at Amazon are the lowest amongst all its peers. And of course, people go work there and they stay there for a long time. But Jeff's perspective is that that money should be enough to live on, and then the upside can come from the stock and bonuses and other things. But even cash bonuses are low. The main way Amazon compensates is through stock option grants. But even stock option grants on a company-wide basis, many companies are diluting, 3%, 5% or more of their total shares outstanding every year as stock-based compensation. Amazon, that number has usually been 1 or 2%. And Jeff Bezos himself has never awarded himself any options. So he's typically had a lower salary than even the 170,000. He hasn't had a bonus, and he hasn't had stock options. Uh, so when we look at anomalies, you see on one side is a company that is really tight about how it spends its cash. On the other side, we look at their income statement and we see that they have no earnings. And the third piece is that we know that many of their businesses are truly exceptional businesses. So, for example, they have a large advertising business. uh, the cost of that advertising business approaches zero. So the margins on their, several $billion that they take in on advertising could be somewhere between 50 to 90%. So it's a very profitable business, but that money doesn't show up in the income statement. When they do third-party logistics, there's a third-party bookseller, and Amazon doesn't own the book, but it manages the sale process. That is a very profitable business for them because they have no inventory and they are providing services, and probably uh, the margins or the return on capital on that business is also very high. But again, that doesn't show up. And of course, Amazon Web Services is likely to be spectacularly profitable. So we know that so the when you look at the company's financials, you can see the revenue of all these businesses. And you may even be able to see expenses of some of the businesses, but you can definitely see the expenses of the whole company. They may not break out expenses by each business, but we can do an adjustment on that. So we can say, okay, we think that the logistics business maybe has a 25% margin, for example, and we think the cloud business maybe has a 40% margin, for example, and we think advertising has a 60% or 70% margin. And you can run those numbers and you can get to a kind of more realistic picture of earnings. And the future is
Sir, I think you were not audible for the last 1 to 2 minutes. So you are not audible. Sir, I think maybe your mic gets disconnected to the laptop. Can you please check? Aryan, can you confirm if you can hear sir's voice?
No, no, I can't hear.
Sir, can you please rejoin the meeting? Maybe it can work in that way.
I think sir has rejoined.
Can you hear me now?
Yes, sir, you are audible now.
Okay, I'm using a different mic, which is maybe not as good. But is the sound quality okay?
Yes, sir. So you are
Okay,
clear.
so then we'll proceed this way. We can always go to plan B. So were you able to hear what I was saying?
Sir, I couldn't hear the last 2 minutes, but I heard all the earlier parts where you explained about their uh, how they build the culture, then their different businesses, the income and expense components, and those things.
So you got the full answer to that question.
Yes, sir.
Okay, so let's go to the next question.
Yes, sir. So, what are some of your biggest takeaways from both Charlie Munger and Lee Lu, which is very rare and important in investing journey?
Well, I would say the most things I have learned from Charlie is not what he has said. It is by observing him in his home, in his club, with his friends, with his family, and observing how he organizes his time and things like that. And so uh, one of the things, and this is probably true about both Warren and Charlie, is when they are working on a particular problem, uh, they're very focused on that problem, and they put all their energy and interest into that. But after they have solved that problem or fixed the problem, they completely eliminate it from their minds. And now this may seem obvious, but what happens with other humans is other humans dwell in their brains on things that they have accomplished. So people like to think back, oh, I did so well in school, I got these good grades, I got good GPA, I got a good job, I have a good wife, and I am got promoted. So they're looking at the past. They're looking at the past and dwelling on the past. Warren and Charlie, oh, I figured out what the problem with my mic was. My mic had been disconnected. Sorry. Um, so I can uh, I can try going back to the other mic. Let's see if this works. Can you still hear me?
Yes, sir.
Okay, we're back to a better mic. Life is good. Um, so basically, Warren and Charlie have a very large body of accomplishments. And the reason their body of accomplishments is so large is they never think about what they have already done. And they never really even kind of, you can say, congratulate themselves about all their accomplishments. What they are most focused on is the next problem in front of them. Um, so I will give you an example of um, of this particular phenomena. There is a very large ranch in California. It is called Doheny Ranch, and I'm just pull it up for a second so I get the size right. Basically, um, if you if you look at Doheny Ranch, which is in Central California, it is tens of thousands of acres, and it has 2 miles of beachfront. It is extremely valuable land. I would say probably the market value of Doheny Ranch would be several $1 billion, every maybe north of 10, $20 billion. And Charlie found out that the family that owned the ranch was interested in selling it. And he contacted the family and he convinced them to sell the ranch to him for $75 million, which is less than 1% or even maybe 1/10 of 1% of the real value of the property. And what he told them is that, look, I will buy this for 75 million. And the next day, I will donate it to the University of California, Santa Barbara. And that ranch is 8 minutes from the Santa Barbara campus, UCSB campus, if you build like a tram system to go between the current Santa Barbara campus and this new 20,000 acres. And and he told the family that, look, the California Coastal Commission, which controls all development in the area, they will never let you or any buyer, which is a private party, ever develop this property. They will put so many roadblocks in front of you for decades that nothing will happen. But here you can do a lot of good because the university owns it. They will be able to convince the state and other authorities to allow development because it is for the good of the people of California. And amazingly, that family agreed. And Charlie bought that property for 75 million. And the next day he donated it to the University of California, Santa Barbara. 300 years from now, this particular transaction will have a massive positive impact on students at the University of California, Santa Barbara. Basically, the University of California, Santa Barbara, unlike all the other University of California campuses like Berkeley or UCLA, will never, ever run out of land. They will never, no matter how much they grow, have problems with student housing or anything. They have land into perpetuity. And it is very prime land. It's beautiful land, with hills and valleys and beachfront and everything. So Charlie got this done. It is a very significant accomplishment. He's never talked to me about it after that. It was like for one time, one day he talked. He doesn't talk about it to anybody. The media doesn't know about it. Okay. And there are hundreds and hundreds of such things that these guys have done. Each is more powerful than the other. But the concept of not looking back, not patting yourself on the back, not wanting other people to pat you on the back, and just be a machine going forward and be a Karam Yogi, where it is our duty to do our job. It is not our duty to do a job to expect some reward in terms of people saying you're a great guy or you've done such a good job. He doesn't really care about those things. So this has been a very powerful lesson for me because I've actually seen how, and I've seen it repeatedly. He's designing student dorms. And one time he said that this design that he has done for student dorms will eventually probably be used by hundreds of universities around the world. It is very groundbreaking architecture. After he was done with it, he's never talked about it. Done, finished. Um, Buffett bought Geico, became a great success, doesn't care. He bought the Burlington Northern Railroad, which will be a property that even 100 years from now will be very powerful and very important to Berkshire, doesn't ever care or talk about it. But he was very focused when that deal was happening. So I also observed Charlie interacting with his kids, with his grandkids, with his daughter-in-laws, son-in-laws, grandkids, great-grandkids, friends, business partners. I've seen a lot of interaction with all those people. And Normally, what I find is if anyone is looking at all their family members, every family has a lot of weird people. This is not just my family. Every family. My family has more weird people than most of the families. But all families have strange, weird, crazy people. And I don't think that situation is any different with the Munger family. And I've seen Charlie interacting with all these people. And he is able to maintain extremely good relationships and strong relationships, even when the people are strange. Like he could just say, okay, this person is strange. I don't need to spend time with this person. But what I and the other thing is about his friends. So we cannot choose our family members. We are going to end up with a lot of weirdos as our family member. That's just the way it is. But we can choose our friends. And when I met Charlie's friends, what I realized is that the quality of these individuals was extremely high. It was much higher than any of my friends. It was much higher than almost most humans I had ever met. They were extremely high quality human individuals. In fact, I never met a single friend of Charlie's who was not a truly exceptional, high quality person. And so that also taught me that having extremely high quality friends, many of his friends are not wealthy. They might be just ordinary in terms of net worth, but they are very high quality. And so I did two things. One is I made all of Charlie's friends my friends because already quality बहुत high है. इससे high थोड़ी जा सकते हैं. And the second is I have tried hard to apply that filter. So when we have friends, we have to be harsh graders, very harsh graders. There are lots of people we are friends with who are very, appear very pleasant, but they are actually useless. Their core qualities are useless. We have to banish them from the kingdom. We have to cut off all interaction. Very difficult to do. But I have tried to do that. I have, uh, my life has become a lot better because it has created room for other relationships. So these are some of the things. It's not so much. I think with Warren and Charlie, um, so much is in the public domain. So we can learn a lot without knowing them. There's no need to know them to learn from them. And really, the main learnings I got from them was not what they were telling me, because almost anything that they are telling me, they have already said before. Um, it's really uh, looking carefully at how they're living their lives.
These are some of the really very amazing observations that you shared, like how they always focus on the present moment. Then they are not obsessed about like, the fame, status, all those aspects, and how dedicated they are while choosing their friends and surroundings so that it would be a good learning environment. A lot of students like us can highly relate with the friends point because like most of us just become friends with anyone and try to spend time with all of them, and it's a really a game changer thing because like as it is said, you are the average of the 5% that you spend most of your time.
It is a very important thing to carefully look at your friendships and get rid of the bottom 80%.
A very
Maybe,
common
maybe,
follow-up
maybe get rid of the bottom 95%.
a very common follow-up question that most of us have on this topic is that like when we remove those bottom 95 or 99%, then we hardly left with 1 or 2%. And since we have very limited surroundings, It's very difficult to find really good, high quality people in our life. So how one can approach that situation?
आईआईटी पटना में तो इतने हाई क्वालिटी लोग भरे हुए हैं, ऐसे तो कोई प्रॉब्लम ही नहीं है. So here I have 2 points to make for you. One is my father used to say, to live a very happy life, one needs just one good wife and one good friend. Less is more. And basically, one does not need to go out and say, let me find 10 great friends. Basically, you just need one person. And after you have one person who you think is truly exceptional, and you have a good relationship and a deep relationship with that person, after that, you leave it to nature and osmosis. Life will bring you in interaction with many, many people. And if you follow the notion of being a harsh grader, then you will end up with more great relationships. So I moved I moved to Austin, Texas about 15 months ago. And when I moved here, I didn't know anyone here. And my best friends are spread out all over the world. Even when I was in California, they were spread out all over the world. There were very few really close friends who lived close to me. But I said, okay, let's run an experiment. Let's try to find, as I said, for sure, there are great people in Austin, Texas, and it's a little nicer if you can interact with your friends in the same geography, etc. So what I decided to do was that twice a month, different people reach out to me for different things, and if something looks intriguing about the person, I invite them to my home uh, in the afternoon for Assam tea. I make excellent Assam tea, the best around. It was taught to me by a very talented Pakistani chef in California. So my Assam tea I know is exceptional. And so I would say that in the last year or 15 months, I must have had maybe um, 25 or 35 people come through for Assam tea. And there's only one person I invited back. And then I invited him back again. Then I invited him back again. And then I told him, look, every time with me we meet for Assam tea. And you have been in Austin for so long and you know this city so well. We can go somewhere else. We can have lunch somewhere. We can have dinner somewhere. We can go uh, check out, go for a walk somewhere, so on. He said, the best place in Austin is at your place for Assam tea. No other place is as good. So I don't want to go any other place. I just want to come here as often as you want us to meet. So we continue meeting, but basically, the other people I met, I think they are pretty high quality people. Some of them actually may be high quality, very high quality people. The thing is that there is no penalty for not letting a great person into your life, but there is a penalty for letting a not so great person. So I'm sure there were many of those 35 people who, if I had spent more time with them, they would have come across as being exceptional. But because there are an infinite number of humans on planet Earth, it therefore mathematically follows that there are an infinite number of great humans on planet Earth. And since we don't need more than half a dozen, 1 dozen great people out of infinity, you can let great people, you can make a mistake on great people, and that's perfectly okay. The important thing is to not make a mistake of letting in a not so great people. And so this person who I have met many times, every time I've met him, my opinion of him has gone up even higher, and I've gotten to know him even better. So in 15 months, there was one person who passed the filters. And if every 15 months one person passes that filter, that's okay. It's a great thing. Really good. Now, there's a person coming tomorrow afternoon. अभी सिर्फ 3% चांस है कि कुछ हो सकता है यहाँ पर. But that's okay. 3% is better than zero.
So can you tell something that you observed in Lilu which makes him very special as very less things in public about him?
So I I asked Charlie, I said, Charlie, you meet this Chinese person by accident, and then you have never given other money managers money to manage, and you give this person money to manage. Why did you do that? So Charlie said it was a complete no-brainer. He said that all one had to do was look at the historic record with Li Lu, and it became very obvious that I was dealing with someone highly unusual. So Li Lu was a student leader at the Tiananmen Square protests in 1989. And the Tiananmen Square was one of the largest, uprisings that took place in China in the last several decades. He would have been one of the top 4 or 5 leaders, student leaders, who was heading that protest. So when the Chinese government cracked down on Tiananmen with the tanks and everything else, they had they wanted to arrest Li Lu, and then we would never ever hear from Li Lu again. He would be somewhere in some dungeon in China for his whole life. And that'd be the end of Li Lu. Some people were able to smuggle Li Lu out of China to Hong Kong. And then some business people from Hong Kong helped him come to the US. And then Columbia University gave him a scholarship. And he did 3 simultaneous degrees. He did a law degree, a MBA, and a undergraduate degree all at the same time. All 3 degrees, he was near the top of his class. And you have to remember, when he came to the United States, he did not speak a word of English. So while not knowing English and starting those 3 degrees, he was at the top of his class in all 3 degrees. And in the history of Columbia University, before or after Li Lu, no one has accomplished that. Columbia University and other supporters had funded all his education and living expenses, some loans and some grants to have him do his degree. So what would happen at the beginning of the semester is he would get some money to pay his rent and his expenses and tuition and books and everything. And he would have sometimes this money, which was a few $1,000s, for a few months before it was needed. Like they would give him money for 4 months for rent on day one. While while the money was waiting in his bank account to be paid for rent and other things, he invested that money. And it wasn't a whole lot. I mean, I would say Columbia at that time would have been like $30,000 a year or something. So they probably gave him like each year like 2,500 a month, or $10,000 every 3 4 months or something. When he graduated from Columbia after 3 4 years, he had $1 million with him. So he took the money they gave him. He paid all the rent and tuition and everything else. And with the float and the earnings on the float, he made $1 million. Then after that, he went into early stage venture capital, did extremely well with that. And then he started investing. So Charlie said, I didn't really have to do much analysis on Lilo. I could just look at the record. And from the record, it was obvious that I was dealing with someone who was highly unusual and who was going to do extremely well. Lilu is a very focused person. Uh, he's um, he's a driven guy. He's a natural leader, and he is very comfortable in situations that might make other people uncomfortable. So, for example, he used to have a lot of investments in Korea. He doesn't speak Korean. He has the same disadvantages in Korea than I do, but he was able to navigate that country really well. So, in general, when you're trying to figure people out, do not listen to what they are saying. Just look at the track record. Just look at the history. Don't try to project forward. And this is the same thing with companies. Don't look at what the company is saying they will do. Look at what the company has done.
This is really a very, very amazing story about Lilu and the lesson that you concluded from that part. I heard about this story 1 year ago, but I was often wondering, like, how did he manage all those unbelievable things together, like not knowing the language, 3 degrees simultaneously, and unbelievable investment performance at that time.
Because he is a highly unusual person. So I think in investing and in life, we want to look for anomalies. Lilu is an anomaly. Munger is an anomaly. Buffett is an anomaly. And we want to look for anomalies. And we want to look for investments that are anomalies. Like Amazon is an anomaly.
So, what are your thoughts about Chinese ATRs listed in Nasdaq like Alibaba, Tencent, JD, etc.? Like there is an existence risk due to Chinese government, but they have been massive cash printing machines and the backbone of Chinese economy for a really long time.
Yeah, those are very high quality businesses. They're likely to do very well in the future. But for me, fall into the too hard pile. So we have a lot of unpredictability with the leadership in China. And we have a lot of unpredictability well, we do know that the political leaders of China do not want a second power base of people in China who may threaten them. And it may be rational or irrational, but that's how they look at things. And so when you have I would say, a factor that is kind of hard to forecast, um, and it can have a huge impact on the investment, then maybe staying away is appropriate. But also, people could do really well making those investments. So it's to each his own.
So one of the biggest competitive advantage of US economy had been the dollar being the global reserve currency for the last 70 years. Recently, India, China, and Russia through BRICS and other ways have been trying to reduce the dollar's influence, and US is also facing high debt to GDP issue along with the inflation. Do you think that it could be a turning point for countries like India for investment point of view, whereas difficult to get really great opportunities in the US?
I don't expect in my lifetime for the US being the reserve currency to change. So I'm going to die on June 11th, 2054. And we have about 31 years and 1 month left. So I don't expect in the next 3 decades and probably beyond, there will be any change in the reserve currency of planet Earth. Um, uh, the United States has an incredible number of strengths. It has a number of problems, which, if it chooses to, it can fix those problems relatively easily. It's the only country in the world which has imported an incredible talent pool from all over the world. And it has also harnessed that talent pool extremely well. We have a person like Elon Musk, who was a finished product who came from South Africa, who has created tremendous value for the United States. Uh, we have, Sergey Brin's parents migrated from Russia. We have so many IIT alums in the US who have done so well, and it goes on and on. So I think that um, I would never bet against the US. And I don't think any other country, for as far as I can see, even a group of countries together, can be the reserve currency.
Charlie Munger once said that earning the first $100,000 is a bitch and you have to do it no matter what. So, what could be some good and relevant ways for a college student to do that who wants to become a really successful investor in his career?
I'm sorry, I didn't get the first part. What were you saying in the first part of the question?
I was saying that Charlie Munger once said that earning the first $100,000 is a bitch and one has to do it no matter what. So,
Yeah.
what could be
So,
some good and relevant ways for a college student?
well, I mean, the surest way to accumulate a nest egg is to spend less than you earn. And so we can definitely control our savings rate, and we can invest the savings rate in mid cap, small cap equity index fund in India, for example, and focus on improving our skills, improving our income, increasing our savings, and you may get to $100,000 in savings in 10, 15 years or less, still be a young man, and without taking much risk, and then you can go from there.
What are your thoughts about algorithmic trading as well as Bitcoin? Because Bitcoin has already sustained last 14 years along with 3 to 4 bear cycles successfully, and it seems it is showing quite a resilience till now.
Yeah, I mean, I don't have an interest in Bitcoin. I think the people who invest in it will, in the end, be very sorry. But it doesn't matter whether I'm right or wrong because I don't have a long or short position. But I would say that bubbles are very common in our environment, and bubbles can go on for a long time. And whatever has happened in the history of Bitcoin does not necessarily mean that the future is great. And algorithmic trading is outside my circle of competence. And all I can say is that I don't see any algorithmic traders amongst the 10 or 20 richest people in the world. And I see a lot of them with no net worth.
What are your 5 favorite not so famous books or resources that help you a lot in your investing journey?
There's a book I read recently, which I thought was exceptional, which is called "What Darwin Taught Me About Investing," and it's an extremely well written book. Uh, it's an IITian who wrote the book. He graduated from IIT Delhi. Uh, Pulak Prasad. That's an exceptional book. And another book I'm just finishing, which I think is also a very good book, is Where the Money Is. Uh, I forget the name of the author, but that book came out, I think, last year. Um, And of course, historically, I've gotten a lot out of Poor Charlie's Almanac and the Buffett biographies and so on. So these are some good books from my vantage point.
How can small retail investors potentially find a mega bagger stock that may give big returns like 50x or 100x in the long run? Like, what could be some good early signs of those companies?
The small investor has a big advantage over the large investor. Investing is one of the only disciplines where size is a disadvantage. And so therefore a person working with very small amounts of capital can invest in anything. A person like Buffett uh, really needs to put, tens of billions to work at a time, and that exceeds the market cap of almost all companies. So the universe for investing for Buffett is very small. The universe for investing for a small investor is extremely large. And so a small investor has a huge advantage if they can harness that advantage. And to harness the advantage, they need to be focused on anomalies. They need to be focused on things that are relatively small because you're going to generally have more mispricing amongst the smaller names and the larger names. And someone who's willing to do the work, willing to basically roll up the sleeves and do the work. Um, did you want to open the floor to questions from the audience?
Yes, sir. So now audience members can ask their questions one by one. They can raise their hands and I will tell them to unmute one by one. Yes, Bhupesh, you can unmute. You can ask your question now, Bhupesh. Saifuddin, you can ask your question.
Mr. Pavray, thanks a lot for giving such a time. So my question was regarding a time at Transtech. So you were kind of a retail investor back then. So how was your process of looking at stocks back then and now since you're managing professionally, how it has changed? And another question is, are modes quantifiable or we can do it quantitatively or it's always qualitative? Since you know Manga and Charlie so closely, how they do it and how we can advantage from that.
Yeah, so I think when I started my journey as an investor in the mid 90s, um, the industry I was most familiar with was software and technology. And of course, we know that those industries have, uh, generally speaking, very high returns on equity and high returns on invested capital. So those tend to be good places if you are not, overpaying, etc. And so basically, that's where I focused my attention because it was uh, very much within my circle of competence at the time. And basically, I looked for at that time I was a uh, just straight buy and hold investor. I wanted to buy these great growing businesses and just hold them for a long time. And one of the things that happened in 99 thereabouts is that I could see a lot of froth in the market at that time. I could probably see the bubble maybe a few months before most other people were aware of it. The dot-com bubble was a very massive bubble. And so in 99 or thereabouts, I started to make a change to my investing style, where I uh, left buy and hold in favor of Graham, because I was noticing that very basic non-tech businesses had gotten really cheap, while the tech businesses were getting, really kind of euphoric in market caps and pricing. And that worked extremely well. So basically, when I started my journey as a professional investor in '99, I had mostly switched over to Graham. And basically, as the Nasdaq crashed and burned from 2000 to really took more than 10 years to get back to where it was, Pabrai funds did really well because we really didn't have any exposure to high flyers, etc. In fact, the first year we were up 70% while the Nasdaq had already begun its crash, and it continued to crash for 2 more years and eventually lost 75% of its value, while we continued to, post annualized returns north of 30%. So what I should have done is probably around the 2012 timeframe or thereabouts, I should have switched back to the great businesses. We're always better off investing in great businesses. It's just that I was just seeing such egregious pricing that I was very concerned, which was actually a good call because we would have been we wouldn't have done so well if we were holding a bunch of tech names in 2000. And but I had become so comfortable with these, Graham type bets that I really didn't start to make the switch till around 2020. So I basically 8 years, I would say, was suboptimal. We still had some good investments and such in that period, but uh, it could have been better if I had been more focused on the buy and hold and so on. And of course, that's where I am today. I've actually basically almost come full circle. I don't have tech investments like I used to have in the mid '90s uh, because it's still they were quite fairly priced, I would say, in the mid '90s, and they started to get overpriced. Today, we have so many more savvy investors picking over these businesses. They're coming public a lot later. They're coming public at much richer valuations. That the game is a lot harder on the tech side. But I look for those, and I've definitely made the transition to buy and hold. Just haven't made the full transition to buy and hold in tech. At some point, hopefully, that will those opportunities will present themselves.
Now, Bhupesh, you can ask your question by unmuting yourself.
Hello. Hi. Good morning, sir. This is third time I'm interacting with you, and first time we are not in person mode. So my question is, what were some of the most influential books in your life related to investment or life in general?
Well, I think Poor Charlie's Almanac is a seminal work. I also think that if you look at Poor Charlie's Almanac, and at the back of the book is a book list by Charlie Munger.
Okay.
That's another great list of books. The Buffett biographies are excellent.
Mhm.
I also think that all the archived annual meetings on buffett.cnbc.com, where they've archived probably more than 25, 30 years of meetings, uh, and each one is more than 5 hours, is a tremendous resource. So I think, and then of course the Buffett partnership letters and the shareholder letters and such. So I think that is kind of a good body of work to go through.
And any suggestions for someone who is at the very beginning level in the investment fields?
Yeah, I would say Poor Charlie's Almanac is a good place to start.
Okay. Thank you.
You are muted, Madhur.
I'm really sorry. Anuj, now you can ask your question.
Hello, am I audible?
Yes.
Yes.
Yes, sir. My question to you is that you have told us that we should surround ourselves from high quality individuals, but in order to attract high quality individuals, we should be high quality individuals in order to attract other high quality individuals because like attract like. So, what are your suggestions that how can we convert ourselves to high quality individuals?
Well, you don't need to be high quality. You just need to get people who are higher quality than you. So it's all relative. But I would say that uh, you know Buffett says that if you look at people, and especially if you look at your classmates or people you're taking classes with or in your hostel and so on, look at the individuals that you admire the most, and then ask yourself what are the qualities they have that are leading to that admiration, and then ask yourself if you can incorporate some of those qualities into yourself. So some of the base qualities I think is kindness is a very important trait. I think there are no people who are kind who will die without friends. So kindness is a great philosophy. There is a book by Adam Grant called Give and Take, which is a great book to read. And Adam Grant says that he's now a good friend of mine. He says that there are three kinds of people in the world. There are the givers, there are the takers, and there are the matchers. So the takers are the people you want to have nothing to do with. So these are the people who are always trying to see what they can get from other people, what they can extract from other people without any, you know, payback or, reciprocation by them. So those are the ones you should try to eliminate as soon as possible, the takers. The matchers are also people you don't want to have anything to do with. They are basically kind of people who say, okay, you know, Madhur was nice to me. He lent me some book of his. I will also lend him some book someday. So the matchers also are all useless people. So we don't want the matchers. What we want in our lives are the givers, and what we want to be in our lives are givers. So the givers, if you read that book, basically it says these are people who are trying to help other people without looking for something to come back to them. So they are just selflessly, kind of like a Mother Teresa. Of course, Mother Teresa is an extreme example, but they are selfless. And in many ways, Buffett and Munger are selfless. They are givers. And what we want to do in life is we want to surround ourselves with givers, and we want to be a giver. So we don't want to be doing exact mathematical analysis of what someone has done for you, and therefore you should do the same. You should be willing to do things for people, whether they've done anything for you or not. And, you know, a lot of people tell me repeatedly that we should tell the Dakshana scholars to donate some portion of their income to Dakshana after they are doing well. And we don't do that. We actually do not talk to them at all about anything related to helping Dakshana or giving money to Dakshana, any of that. We don't do that. Now, many of them do give donations to us. They help us liaise with their companies and different things. They do a lot of things for us. Uh, they do it voluntarily, right? So the ones who are doing it voluntarily, it's a signal. Those are probably the givers, because they're in many cases they're giving disproportionate amounts. We have probably spent about $2,500 or $3,000 on each of these folks. Many of them have already given many times that to us. And so they are not trying to match. And we are not trying to tell them, but we observe, we observe कौन क्या कर रहा है, because फिर givers की list बन जाती है. And then that becomes easy to sift through people and so on. And so even in Dakshana, we don't believe Dakshana should be a matcher organization or a taker organization. It should be a giver organization, and the rest will take care of itself. And so it's perfectly fine.
Thank you.
So this was a really nice thought that you shared of like giving selflessly instead of just taking or just being involved in bargaining. Like I give to someone only if he or she has given to me or equal to that measure, like a classical bargain thing. There are some more people who have raised hands for asking questions, but it's already 1 hour. So like if you are available, we can uh, ask them.
We lost some time because of my stupid mic, so we can keep going for some time. So let's take a couple more questions.
Anyone else has questions, they can raise their hands. And those who have already asked, please lower your hands. Dipanshu, you can ask your question.
Good evening, sir.
Hello.
Sir, I'm a Dakshina scholar from Dakshina Kottayam, and I met with you 4 years ago. And sir, at that time, you did all the mathematics of rule of 72 and all those mathematics, and how we can double our money in 4 years by getting 18%. And you told us that from second year onwards, we can read a lot of books to learn about that, how to make that 18% work. And since then, I'm reading a lot of books. But right now, I have two major questions which I would like to ask. First question is that how to filter out the companies, as Ben Graham have said in the Intelligent Investor, that great investments and great companies both are different, and we need to look for the great investments. And great investments are the investments which Wall Street doesn't know about. So
Yeah, I mean, I think that the most important thing is to be patient. The second thing is to be a student. So basically, we want to be students of business. And by the way, I said that not second year, but third year. आप थोड़ा जल्दी शुरू ही हो गए हो, but that's okay. You are a high achiever, overachiever, it's okay. But basically, we want to be students of business. We want to understand businesses. We want to understand what their, economics and different things are. And then after that, we want to really look for what I would call anomalies, which is that something is really standing out to you as not making sense, as something which says to you that market doesn't understand this, market doesn't appreciate this, and you have some understanding uh, that the market does not, and so on. So um, for the most part, most businesses don't fit those parameters. But because there are thousands of listed companies in India and outside India, and we are only looking for maybe two, three, four of them, and we're really only looking for one at a time. It's a treasure hunt, and so I'll give you a story that some of you may have heard. Is that when Buffett was about 11 or 12 years old, he used to go to the horse racing track in Omaha, Aksarban, which is Nebraska spelled backwards. And after all the races had been run and everything was over, people had thrown, all their tickets on the ground or in the garbage. And he used to go through and pick up all the tickets that people had discarded in the hope that somebody who was drunk or something had thrown away a winning ticket. So he would gather up thousands of these tickets, then go home and then carefully look at each one. And he would always find a few tickets where it was a winning ticket or there was some money you could win, but the person didn't understand or just threw it away. And because he was under 18, he could not go to the window to claim the award. He used to send his Aunt Alice. So his Aunt Alice used to give her the winning tickets, and then she would go claim it and give him the money. And then when he was in his mid 20s, he used to go through something known as Moody's manual. And I have the manual here. I'll see if I can just pull it up. Just give me a second. And, so this is the Moody's manual that Buffett used to use in the 50s. You can see it's a very thick book. And if I open it, for example, you know, it has a lot of numbers and details about different companies. It's a lot of detail. So there are a number of these Moody's manuals that came out every year. Buffett went through every single page of these manuals more than once. Some of them he went to 2 or 3 times. And after going through like 1,000, 2,000 companies, he would find some company where like market cap is 15 million and last year earnings are 25 million. You know, things that make no sense. And then he would research those and he would buy those and he did really well. So, and he's continued to do that, in his life, even more recently. So he enjoyed the hunt. And so if you have a personality which is very determined and dogged about picking up thousands of these tickets and finding 3 tickets that may have, $20 or $10 or $30 or something in winnings that someone didn't claim, and you go through all the work of doing that, or to go through these big thick manuals, and you're looking for particular anomalies, you will find them. If you are so like the Upanishad say, as is your wish, so is your will. As is your will, so is your deed. And as is your deed, so is your destiny. And then the punchline, your deepest desire is your destiny. So if you really, really are interested in finding needles in haystacks and finding anomalies, um, and you're focused on that, don't let your grades fall at IIT. But you can do that. It's definitely available for you to do that.
So one more question I have. So I was watching your talk with the Peking University students, and in that talk, you had a lot of information about Mr. Chand of Motherson Sumi, and you had a lot of information about the rain industries, the management CEO of rain industries, and I was amazed that you are able to gather this information after so many difficulties. You had a lot of difficulties in meeting the CEO of rain industries. Then I am actually slightly confused how we can get information about such CEOs or management people since we are very small.
Yeah, we don't need to meet them to get the information because we want to look at the track record. And the track record is available in black and white. So with Motherson Sumi, we can look at the history, and it's a large company, so a lot of things have been written up on them. So there's a lot of history available. And Jagan Reddy now at Rain, we are friends, so that's good. And I think I usually meet Jagan once a year, and that's fine. But those meetings are not really relevant in terms of the thesis for Rain, or the investment of Rain, or any of that. I think that I'm uh, much more focused on the history. And the history of both these businesses uh, will tell you a lot about the future.
Thank you, sir.
Sure. And wish you all the best and say hello to all the Dakshana scholars at IIT Patna.
Actually, sir, I am from IIT Roorkee. I will say hello to IIT Roorkee guys.
Oh, you are like using digital technology to transcend Patna. That's okay. You can let your fellow classmates at Roorkee know.
Okay, sir.
I said hello.
Okay, sir, I will say.
Why don't we take one more question from Manav?
Manav, you can ask your question.
Am I audible?
Yes.
Yes.
Hello, Monisha. I am Manav Bangwar from IIT BSU, and I am rejected seat from Dakshana. Sir, I will ask one question. Like you did lunch with Warren Buffett, so what the one thing you will let us know about that particular lunch that you learned from him? The great investor of all time.
Yeah. I mean, the lunch with Buffett uh, turned out to be way better than I ever thought. I just wanted to meet him and thank him. I didn't really have any expectations from that from that lunch. It took place 15 years ago now in 2008. And one of the things that is important to Buffett is that he knows that these lunches, which the last one he did, I think was last year, he knows that these lunches are very important to the people who bid for them and win them. And he wants them to feel like they got a bargain. So I think last year the lunch went for $17 million or $19 million, some large number. But he's very focused on making sure the person thinks they got a bargain. So when he came for the lunch, he told us that, look, I have not, I have nothing going on afternoon. I can be here as long as you guys want. And when you guys are sick and tired of me, you can let me know and I'll leave. So he didn't really set a time frame for that lunch. And after that lunch, I had a few other lunches with some other tech CEOs and different things. And it was a very different experience. They were in a hurry. They met in the company cafeteria. They had 45 minutes. It was a very different experience. With Buffett, you feel like you're meeting your grandfather. And what he tried to do is every question we asked him, he tried to make it into a learning opportunity. And of course, what I did not expect to happen as a result of that lunch was that there was a friendship developed with Warren. He introduced us to Charlie Munger, which led to a very deep friendship with Charlie Munger. I probably played, maybe, I don't know, 30 or 50 times bridge with Charlie on Fridays at his club, probably 4 or 5 hours each time, including plus lunch every time, and then dinners at his place and so on. So um, uh, many things came out of that lunch, which I had no expectations for. And so it was again, it's an example of the kind of the givers end up ruling the world. So my objective was only to give. I didn't have any objective to receive anything. But usually what happens is that when you're trying to selflessly give, the universe conspires to help you. And so there's a lesson there on that as well. And so yeah, I mean, it worked out very well, and I am just grateful that in fact we will look back at this time with some um, I think astonishment that we lived in the time of Warren and Charlie. And it's kind of like living in the time of Gandhi or Einstein or Newton. And, going and meeting them for lunch or whatever. That it would be quite the experience. So yeah, so no complaints. Life is great. Thank you.
Thank you so much.
So
Sir,
shall we bring it to a close, Mother?
yes, sir. So I was just saying the ending note. So sir, before that, like as you said, like अच्छा कम करने से अपने आप सब चीजें अच्छा हो जाती है. So overall, on behalf of the entire team of the Finance Club IIT Patna, I would like to thank Mr. Mohnish Pabrai sir for such a truly insightful session. I am certain that each and every person in the audience took valuable insights from it. I would also like to thank the audience for being so patient and enthusiastic today. Thank you, everyone.
Thank you, Madhur. It was a pleasure to hang out with all of you.
Thank you, sir.
Thank you, Monica.